Hello everyone, I'm Leya, a trader with 6 years of experience. In this video you will learn how not to trade if you want to break into the market and make trading a significant source of income. Most of mistakes I'll talk about I've experienced myself, so I understand the topic well. Get comfortable, put yourself some coffee, wrap up in blanket and let's get started! First, I want to highlight the mistake of lacking knowledge. Every profession starts with education. Want to become a doctor? You need to graduate from medical school. Dream of driving a car? Welcome to driving school. I think you get the logic. But for some reason, many people think trading doesn't require learning. You just need to open the terminal, press a button, and dollars start raining down on you. No, financial markets don't work like that. And those who try to become traders this way are kicked out of here very quickly. Don't want to be among them? Start with education. For example, first you should learn the terms commonly used in the market. Who bulls and bears are. What short and long mean. How traders differ from investors. Why candlesticks on charts are called Japanese candles. After terms you can understand how markets work. What assets are traded on them, and who besides traders is involved in all this. But don't dwell too long on theory. After all, you came here to make money. The second mistake is diving into trades without money management. Don't be scared of this term, I'll explain everything now. Money management is proper management of your deposit. When a person starts trading, they want everything at once, and if you don't stop them, they'll be out of the market in the first week or even in the same day. For example, you have $1,000 and a huge desire to earn, but you completely lack the desire to follow money management. You deposit the entire amount into your account and enter trades with $300 to $500. Sure, if the market is kind and the price goes there it's good, but as a rule everything happens the other way around. A few such entries and your stash of green leaves your account. A reasonable risk per trade is to enter with an amount not exceeding 5% of your deposit. With $1,000 it would be $20 to $50. Yes, you won't earn quickly this way, but we don't need to earn quickly, we need to earn well. If you find it difficult to understand this, I invite you to my Telegram channel. There will be a lot of information about trading signals on which you can earn while mastering the market. And if you have any question, I'll be happy to answer them. And now let's move on to the third mistake, haste. It's hard to imagine how many traders have fallen trying to make a quick buck. This is when you enter the market with large sum for very short periods. For example, you bet $1,000 to $2,000 with an expiry from 1 to 5 minutes. Yes, there are people who trade like this and are successful, but these are professionals who have already gone through the 7th circle of hell in trading. Don't start with this. Besides an easy way to lose your deposit at the start, you won't gain anything. Enter the market without haste. It has been around for a very long time and won't go anywhere. Start with small amounts and long-term trades, from a few hours to a couple of days, and gradually decrease the time. This way you will get used to the market, understand which trading times are more comfortable for you to use, and won't get nervous about rapidly changing prices during entries and wrong decisions made in haste. Never trade with altered mental state or when feeling unwell. That's mistake number 4. Don't start trading after a feast or with a high fever. You'll face distraction, errors in chart analysis, and disappointment in the outcome. As they say, a trader under the influence is not in control of their deposit. You wouldn't get behind the wheel with a temperature of 39 degrees or after a couple of shots, would you? The consequences can be very unpleasant or even tragic. So don't engage in trading either. You should trade with a clear mind, well-rested, and with a clear understanding of what you're doing. Alcohol or illness significantly alter perception and dull senses. A person starts taking risks where they wouldn't have before. Take a break, recover, and come back to the market with renewed energy in a day or two. The fifth mistake is trading with borrowed money. Loans are generally not a good idea, and borrowing from a bank to fund your deposit is even worse. Imagine you did that, started trading, and your balance went into the negative. Your thoughts will be solely focused on recouping the losses, because the bank won't wait for a late payment, will start calling, threatening legal action, and so on. And if you start trading in profit, you will constantly worry that all of your profit will go towards payments. Do you need that? The obligation to repay the money won't motivate you. On the contrary, the sense of debt to the bank will push you to make risky entries to quickly repay the loan. This will lead to more mistakes and disappointments. Allocate money for trading from your disposable income. It's better if it's $50 to $100 but your own, when $500 or $1,000 but you'll have to repay somewhere. While you contemplate this information, subscribe to my channel if you haven't already, and hit the like button if you enjoyed the video. Emotional issues, mistake number 6. This is the most insidious thing a trader can encounter. Anger, despair, greed, fear, and even euphoria can ruin the most successful trading in a moment. Some emotions can turn a person into a gambler, while others can distract from trading and scatter attention. Imagine what trading can be like if your boss just yelled at you or your child failed the second grade, and what trading can there be when your eyes are shining and you really want to make some cash. So much so that emotions overflow. This is no longer trading in financial market, but more like gambling on red or black. Before sitting down at the trading terminal, assess your emotional state. Don't engage in the market if it's unstable. First, calm down, balance everything, go for a walk if your emotions settle down, then trade away. Can't calm down, but still need to trade? Join my channel and work with signals. That way you definitely won't mess anything up. Links in the description. The 7th mistake is copying other people's strategies. There is nothing wrong with observing the success of cool traders. It motivates, gives an understanding what earning here is possible. But it's impossible to replicate the results by simply trading the same patterns as another person. Trading has this peculiarity: what works for one may not work at all for another. Every strategy is built individually, although the indicators, technical analysis figures, and news are the same. From successful traders, you can take something, for example, general trading principles, see how they prepare to enter a trade, what risk to reward ratio they observe, how many hours a day they spend at the terminal, and so on. But a strategy is a living thing, it will come and be honed over time. Using the martingale strategy is the 8th and most fatal mistake that even the most experienced in this business make. Martingale is a well-known casino strategy, where the next bet is doubled if the previous one lost. Many people inexplicably transfer this method to binary options, in the short term for boosting the deposit or if you're sure the price will eventually go in the right direction. You can use it, but I don't recommend basing your strategy on martingale and its variations. Don't pull strategies from casinos, because the casino always wins. No matter what you do, strategies should be taken from where risk control, money management, and trading psychology are understood. This is the stock market, futures market, and forex. They have existed long enough to adapt strategies from there. Working against a trend is the 9th deadly sin of trader. It's not for nothing that pros say the trend is your friend. For those who don't know, a trend in the market is a direction in which the price predominantly moves. If it's been going up for several weeks, it wouldn't be very wise to make most entries for selling. It's like swimming against the current. No matter how strong you are, you'll eventually get swept away. Yes, there are counter-trend strategies, but they are for very experienced folks who have been in the market for years. Don't be upset, there are plenty of opportunities to profit from trend entries too. You just need to be able to see them in time. Plus, trading the trend has the advantage that most popular strategies are tailored to it. You take such strategy, test it, adapt it to yourself, and start collecting profits from the market. Mistake number 10. Trading without plan. Remember, you have a job description at work, right? Even if you're an office worker or remote employer, your company gave you a set of rules that you must follow. For example, you must be available for tasks from 9 to 6 on weekdays and have a call at the end of the workday on Fridays. Trading is an area where you absolutely cannot do without rules, especially if you're just starting out. But you'll have to set them yourself. A trading plan helps discipline yourself, avoid foolish trades, and control risk. In it, you can write down your trading schedule, what you use in your strategy, which days you don't trade at all, and what motivates you. The last 11th mistake is diversifying across assets. This is when you start trading everything inside, dozens of currency pairs, several cryptocurrencies, metals, commodities, and all of this at once. It's like chasing after 10 hares at once. You won't catch any. Each asset has its own story, audience, investors, companies, and even countries, and it behaves accordingly. It reacts to specific news, shows more signals for one strategy and fewer for another, trades better at one time and worse at another. The solution is not to dive into a dozen different instruments at once. Choose 3 to 5 of them and immerse yourself in their study. See how they behave on the chart, read their history, statistics. Then there will be no lack of focus, no wasted time in the race for a large number of signals. I've listed the many, but far from all the mistakes I've encountered myself and which you will definitely encounter while mastering trading. Want to avoid them? No problem, it's easy to do in a cool team where any mistakes will be noticed in time and helped to correct. Learning in a community is easier, simpler and faster. So, I invite you to my Telegram channel, the link to which I left in the description, where you will get awesome trading experience, see how pro traders break into the market, and learn to make profits without nerves, hustle, and with minimal risks. Subscribe, like, comment, and I'll prepare the next video.